Leading with the Suited Bull presents an audio summary of The Intelligent Investor, the definitive book on value investing, written by Benjamin Graham, known as the Dean of Wall Street. A book highly recognized by Warren Buffett as the best book on investing ever written. Without further ado, let's get started. E1, The Art of Investing, Unveiling the Path to Financial Success. In the realm of finance, investing holds the key to unlocking a world of opportunities and securing a prosperous future. By delving into the art of investing, individuals and businesses can strategically allocate capital, expecting not only financial returns but also the fulfillment of crucial financial goals such as retirement planning, educational funding, and wealth accumulation. In its essence, an investor is an astute individual or entity that dedicates capital with the expectation of reaping substantial financial rewards. Drawing upon an array of financial instruments, investors carefully navigate the investment landscape, seeking assets poised to yield appreciable monetary returns in the future. Within the insightful work of Benjamin Graham and Jason Zweig, the intricate world of investing is brought to light with greater depth and clarity. The authors shed light on two fundamental concepts widely encountered in the realm of stock exchange trading: investment and speculation. Distinguishing between these terms becomes imperative. An investment, by nature, assures the security of one's capital and offers the promise of profitable returns. In contrast, speculation involves ventures that lack guarantees of both capital preservation and profit within the investment horizon. Thus, an intelligent investor strives for long-term rewards, while a speculator seeks immediate gains. Throughout this engaging summary, readers will gain profound insights into these distinct personas, comprehending the qualities that differentiate them. Furthermore, the importance of conducting meticulous research prior to committing funds will be emphasized, empowering individuals to make informed investment decisions. By the conclusion of this enlightening journey, you will possess the knowledge to navigate a plethora of investment options, ensuring the selection of the optimal choice that aligns with your financial aspirations. E2, Unveiling the Path to Intelligent Investing, the Power of Research and Strategies for Long-Term Success. In the realm of investing, intelligence lies in the hands of those who meticulously conduct ample research, ensuring informed decisions that safeguard against potential losses. By observing the performance history of companies, safeguarding against risks, and avoiding speculative behavior, intelligent investors opt for stable stock returns, driven by long-term goals and a focus on wealth preservation. Distinguished by their astute approach, intelligent investors delve into comprehensive analysis of the companies they consider investing in. They diligently study the historical patterns of gains and losses, enabling them to make informed choices while mitigating potential risks. Such investors prioritize safeguarding their capital before venturing into new investment opportunities. While investing appears as a logical step toward building and maintaining wealth, it is worth noting that speculation often fuels the profits of stock exchange giants, commonly known as Wall Street. These institutions tend to downplay the merits of investing as a reliable wealth-building strategy. Speculators, driven by impulsive decisions and short-term gains, often fall victim to tactics that have temporarily worked. However, akin to gambling, the long-term winners are the institutions themselves, as they have calibrated the odds in their favor. Unsuspecting individuals, fueled by a desire for quick financial gains, may pour their capital into such ventures, only to be left disappointed in the end. Investment, on the other hand, stands as a steadfast approach. It not only works presently but also holds the promise of future success. Intelligent investors understand this fundamental principle and stay ahead of the market, avoiding speculative temptations. Nevertheless, what happens when the market experiences setbacks or unforeseen glitches that make profitability more challenging? How does the astute investor navigate the complexities of inflation and its impact on the market? Inflation, characterized by a significant reduction in the value of money, often occurs due to increased money supply or a sudden influx of cash into the market. This phenomenon exerts a considerable influence on the market, diminishing the value of previously purchased shares and leaving investors with stocks of diminished monetary worth. In the face of inflation, intelligent investors strategize to overcome adversity. One recommended approach is to capitalize on the opportunity by acquiring more stocks at their reduced value, leveraging the eventual market recovery to sell them at a higher monetary value. By embracing the power of research, cultivating long-term goals, and understanding market dynamics, intelligent investors position themselves for sustained success, navigating both anticipated and unexpected challenges along the way. E3. Mastering the art of intelligent investing, making informed decisions to stay ahead of the game. In the ever-evolving world of investing, staying ahead of the curve requires astute decision-making and a keen awareness of potential pitfalls. While investing in bonds may seem like a reliable strategy to navigate the market's inconsistencies, it is crucial to approach it with caution. The intelligent investor recognizes bonds as a passive option, not a principal obligation, and may even explore foreign bonds for increased opportunities, albeit with heightened risk. Conventional wisdom may tempt the average investor to dive into every startup's initial public offering, IPO, in pursuit of quick profits. However, this speculative approach offers no guarantees and often leads to substantial losses. The astute investor, cognizant of the risks involved, knows precisely which IPOs to invest in, evading the pitfalls that cause panic among others who chase after each new sensation. While it may be a common practice to hold stocks and sell them during periods of overpricing, seeking refuge in bonds until prices drop again, the intelligent investor understands that predicting market fluctuations is impractical. Benjamin Graham and Jason Zweig advocate for diversifying portfolios, recognizing the importance of spreading investments across various asset classes. As one pursues diversification, it is essential to exercise caution when considering foreign stocks, as it can undermine the security offered by one's home country's currency. The intelligent investor carefully balances the potential rewards of international investments against the inherent risks associated with currency fluctuations and geopolitical factors. A fascinating insight into the realm of perception versus reality lies in the fact that despite the S&P 500's remarkable 27% gain in 2009, a staggering 66% of investors mistakenly believed it had fallen that year, as reported by Franklin Templeton's survey. This highlights the stark divergence between perception and reality in the world of investing. By making wise decisions, approaching investments with discernment, and understanding the dynamics of the market, the intelligent investor distinguishes themselves, maintaining a steadfast position ahead of the ever-changing investment landscape. E4. Unleashing the potential, the journey to becoming a skilled investor. Embarking on the path of becoming an investor doesn't require formal qualifications or certificates. With the right blend of research and guidance, anyone can embrace the world of stocks and funds confidently. By heeding the wisdom of Benjamin Graham and Jason Zweig, average individuals can traverse the investment landscape fearlessly. Let's explore the essential steps to becoming a successful investor. The initial step towards investment success lies in carefully selecting the companies in which you plan to invest. Dive deep into their long-term goals and strategic plans for the future. Understanding a company's vision and direction provides a solid foundation for evaluating its potential for growth and success. Equally crucial is assessing the quality of a company's management. Beware of companies that prioritize exorbitant payouts to owners or managers, as it may indicate a misalignment of interests with shareholders. Wise investors recognize the importance of investing in companies with competent and shareholder-friendly management teams. Financial strength serves as a cornerstone for investment decisions. Investing in financially robust companies is paramount, as it helps avoid enduring substantial financial setbacks that are challenging to recover from swiftly. Ensure the company possesses the resilience and resources to weather market volatility and sustain long-term success. An evaluation of a company's dividend history and current dividend reports provides valuable insights into its commitment to rewarding shareholders and overall financial health. Studying these aspects helps gauge the company's stability and commitment to long-term value creation. For more specific considerations, remember the following guidelines: steer clear of companies with a total market value less than $2 billion, prioritize companies with current assets at least twice their current liabilities, seek companies with expected stock earnings spanning at least 10 years, favor those consistently paying dividends for a minimum of 20 years, look for at least a 1/3 increase in per-share earnings over the past 10 years, and ensure the company's share price does not exceed 15 times the earnings of the past 3 years. Armed with these indispensable tools, individuals new to investing can navigate the uncertain waters of the stock market confidently. By embracing the defensive investor's approach, one can maximize profit while minimizing risk. Remember, the journey to becoming a skilled investor requires relentless research, practice, and a commitment to making informed decisions. With diligence and perseverance, you can unleash the true potential of your investments. E5. The enterprising investor, combining intelligence and risk-taking for profitable ventures. Within the realm of investing, two distinct types of investors exist: the enterprising investor and the defensive investor, also known as the layman. While traditional guidelines may suffice for the defensive investor, the enterprising investor, driven by a willingness to take risks, requires a different approach. This chapter explores the strategies and measures that cater to the enterprising investor's active and engaged investment style. For the enterprising investor, embracing a proactive approach is key. Actively monitoring the market and closely observing potential winners, as if investing real money, serves as a valuable practice. By immersing themselves in the dynamics of the market, enterprising investors gain insights and refine their decision-making skills. When selecting companies to invest in, it is advisable to favor those led by owners rather than managers. Companies driven by owners tend to prioritize the collective interests of both themselves and their investors. Additionally, keeping a vigilant eye on the company's yearly earnings is crucial, as it provides essential indicators of its financial performance. Ensuring the company's overall health and financial strength is paramount for long-term profitability. By assessing the company's stability and potential for growth, the enterprising investor can position themselves for lucrative investments that yield substantial returns over time. Convertible bonds offer an intriguing opportunity for enterprising investors. These bonds, which can be converted into stocks or other securities, provide diversification options and a protective shield during periods of market volatility. They often outperform regular stocks, serving as a reliable alternative for enterprising investors seeking to avoid underperforming stock options. It is important to note that while convertible bonds offer advantages, they also come with risks. The performance of these bonds closely mirrors the market trends they are linked to. If the underlying stocks perform poorly, the convertible bonds may experience even greater declines, highlighting the multiplier effect associated with this investment instrument. The enterprising investor combines intelligence, active involvement, and a willingness to take risks in pursuit of profitable ventures. By embracing a hands-on approach, monitoring market dynamics, and selecting companies led by owners, enterprising investors position themselves for success. Additionally, exploring the potential of convertible bonds provides diversification opportunities and shelter during market fluctuations. However, it is essential to remain aware of the associated risks. The enterprising investor's journey requires astute decision-making, continuous learning, and a bold spirit to surpass the limitations of traditional investing approaches. E6. Unveiling the best investment, the intelligent investor's path. Selecting the right stocks from the multitude of options can be a daunting task for investors. Benjamin Graham and Jason Zweig shed light on the pitfalls and considerations involved in making informed investment decisions. By analyzing comparable companies, They uncovered the factors that attract investors and provided guidance on avoiding common mistakes. Investors often succumb to emotional impulses when choosing which stocks to buy. Catchy slogans or sentimental associations with a company can cloud judgment. However, the intelligent investor understands that emotions should never drive investment decisions. Rationality and thorough analysis should guide their choices. Humans have a tendency to seek patterns and perceive themselves as market experts based on a few lucky guesses. This fallacy can lead to detrimental outcomes. It is crucial to recognize that consistent gains cannot be guaranteed, and relying on luck is not a sustainable investment strategy. Public opinion and media hype can sway individual perspectives, but popularity alone does not equate to financial success. Intelligent investors conduct thorough research and resist the pressure to follow trends blindly. Peer pressure should not influence investment decisions. Instead, careful analysis and informed judgment should guide their choices. While analysts provide insights, they are not infallible. The intelligent investor considers the words of the business owners themselves, as they often possess a deep understanding of their company's prospects. Some companies openly admit their challenges in generating profits both presently and in the future, making it essential to scrutinize beyond analyst opinions. Diligent market observation reveals that initial valuations can be deceptive. The apparent success of a company at first glance may not accurately reflect its long-term performance. Rather than chasing glamorous companies with exaggerated valuations, the intelligent investor recognizes the value of steady returns from less prominent but growing enterprises. Investing in the dark horse rather than the shiny white horse may unveil hidden opportunities and protect against potential whitewashing. Becoming an intelligent investor requires a disciplined approach that avoids emotional biases and seeks well-researched, rational investment decisions. By recognizing the pitfalls of sentiment-driven choices, understanding the limitations of public opinion, and delving beyond initial valuations, investors can navigate the market with confidence. Embracing the path of the intelligent investor leads to the discovery of hidden gems and the potential for sustainable long-term returns. Closure. Investment is a reliable path to wealth creation that outshines get-rich-quick schemes. While it requires attentiveness, a desire to learn, and the willingness to seek expert advice, anyone can become an intelligent investor with the right tools and mindset. It is not an exclusive practice but a crucial part of wealth building in today's economy. Investing may initially appear complex, but with determination, commitment to research, and practice, it becomes more accessible. It is essential to approach investment with a focus on research and practice, avoiding emotional decision-making and relying on ample data to support investment choices. Mismanagement of portfolios can lead to financial difficulties for investors. Therefore, thorough research and data-driven decision-making are vital to avoid losses and maximize returns. Being an intelligent investor goes beyond mere investing or research. It involves selecting favorable stocks, understanding when to invest and when to sell. In closing, it is advisable to consider viable retirement plans and explore investment options such as stocks and bonds. Researching shares offered by reputable brands and making informed decisions based on your financial goals can contribute to a successful investment journey. Start today and pave the way for a secure financial future. Thanks for attending this audio summary. Subscribe for more and start leading with the suited bull.